Hello, everyone. This is Clay Chase with Torrey Hill Capital. Welcome to the Taseko Mines Non-Deal Roadshow virtual presentation for November 3rd, 2023. Trust and hope you're all well. Very interesting and timely presentation today with a company that we feel is particularly well positioned to benefit from what we and many others in the market expect will be a prolonged upward trend for copper pricing. In fact, copper is hovering around $4 per pound right now, about $3.66. And that's up sharply from the, say, $2 and change level it was just a few years ago. So copper's really been on a good run lately. We think it's going to continue to do that and probably even go up from here. A number of the analysts are predicting copper to be, in the $5 or so price per pound in the next couple of years. And we'll be talking about a few of the key value drivers that we and others anticipate will be driving this pricing dynamic during the presentation, especially the looming tipping point for electric vehicles. I was just at a kind of traveling back from the Las Vegas area, and there was a couple of places we stopped, and there was huge charging stations there. I mean, there was like 25 charging stations at one gas station area and about 40 at another. And these are brand new. I had not seen these before. So there's really starting to see a lot of these charging stations crop up all over at least the Southern California area down here. So I think you're going to see that a lot happening over the next year or two, and then beyond that even more so. Okay, so following today's presentation, which will last about 45 minutes, we'll be doing a short Q&A session. That being said, if you have a question during the presentation, just click on your Q&A icon on your Zoom taskbar. You can also type your question in the chat area on the Zoom taskbar, and we can address your question at that time. So if you have questions, please feel free to ask them during the presentation. Also, post-presentation, we send you a brief survey. Give us your impressions of the company and this presentation, any key takeaways that you had from the meeting today. It's important that you get that survey back to us in a timely manner so we can get that over to the company quickly. Okay, let's get started. Taseko Mines is a mid-tier copper producer. Primary operations are in British Columbia, Canada. Their flagship Gibraltar project, Canada's second largest open pit copper mine. They also have a project in Arizona which just became fully permitted. It's called Florence. It's a different type of production. It's very low impact, very inexpensive. They have a very low cost per pound of production there. So when they get that up and running, which now, like I said, has been fully permitted, that should really lower their overall costs. They're already profitable today, but this will make them even more profitable in the future. In addition to these two producing copper projects, Taseko has a strong portfolio of additional projects, both copper and gold. These are in various stages of development. We'll be covering those projects a little bit as well if we have some time. Taseko trades on the NYSE. The ticker is TGB. On the TSX main board as TKO. Currently trading about $1.31 per share. Gives it a market cap around $496 million US. With us today to discuss Taseko's operations is the company's VP of Investor Relations, Mr. Brian Bergot. Hi, Brian. How are you today?
I'm good, Clay. Thanks very much.
Great. Well, we want to welcome you to the program. I'm going to stop sharing my screen here and allow you to share yours. And that way we'll get right into the presentation. See here, I'm going to stop share. That's right. Okay. Okay, you should be able to put yours up now.
Good.
Great. Looks great. Yeah, it looks great.
Excellent. Okay, well, thanks for the intro, Clay, and welcome everyone. For those of you who have not been on a Zoom or heard the Taseko story before, I'll give you a good run through of the company and our assets. And as Clay mentioned, any questions as we go, just let Clay know, and we'll just take them as the questions come. So I'm Brian Bergot, VP of Investor Relations. I've been at Taseko 18 years and 2 days. Had my 18th anniversary a couple days ago. So I've been here a while. We've grown a lot. We've done a lot. and we're just getting started in actual fact. So I'm going to talk about two key assets today. So first of all is our Gibraltar mine. Gibraltar, as Clay mentioned, is operating. It's the fourth largest open pit copper mine in North America, second largest open pit copper mine in Canada. It's about a 6-hour drive north of Vancouver in south central BC. Has a long mine life ahead of it still, over 22 years of remaining reserves. And it'll produce over the remaining mine life about 130 million pounds of copper per year. And we own 87.5% of Gibraltar. So to our account is about 115 million pounds. It's a great asset, steady state. And yeah, it's been our cornerstone asset really since I began when we fired it up back in 2005. Our other key asset, which we'll focus on today, is Florence Copper. Florence is located about an hour out of Phoenix on the way to Tucson in a town or near a town called Florence, Arizona. We just received our final permit from the EPA, and as of October 31st, so 4 days ago, it became effective. So we are now fully permitted for construction and production of our commercial facility. So we are just getting ready to break ground at Florence, and we'll get into that and all the preparations we've done and the procurement we've done to get ready for construction. We do have a pipeline of other projects, as you can see. They are all in BC. We've got our Yellowhead Copper project just a couple hours from Gibraltar. It's a longer dated project. We have 3 to 4 years of environmental assessment work to do there. So we'll continue to move that forward through the EA over the coming years and get that in a position where we could start construction. But that's a few years away. We also have New Prosperity. New Prosperity is one of the largest undeveloped gold copper projects in the world. There's 13 million ounces of gold in the ground there and another 5 billion pounds of copper. We've had some challenges there with permitting, but we have made some headway in the last couple of years. We can touch on that later if we have time. And then we have Ali, which is a niobium project in northern BC. Niobium is a bit of a niche metal. We are doing a little bit of development work there, but not really spending a lot of money on that project. Our core focus today is copper, which Gibraltar's copper, Florence's copper, as well as Yellowhead. We believe the copper market, the fundamentals of the copper market, they're strong today, and they're only going to get stronger in the years ahead as the world transitions to net zero. And we'll talk a little bit about the fundamentals of copper. We've got the team in place to build out Taseko into a multi-asset company. Most of our senior team are technical mine builders and mine operators. They're proven and with a lot of experience. The other key attribute of Taseko is we are North American based, and there's no one else in our space who is only North American. We like the North American jurisdictions. We like rule of law, and yeah, upfront permitting can be a little bit challenging, but once you have those permits, you don't have to worry about the government stealing your asset. And a prime example of that, which is very topical today, is First Quantum and their Cobre Panama asset in Panama. And earlier this week, basically, the government succumbed to all the locals who had been protesting the mine, and the government announced they're going to have a referendum whether or not they should take away Cobre Panama's their mining license. And that mine is worth about $10 billion to First Quantum, and that has been erased from their market cap here in the last week. So you won't be seeing us chase assets outside of North America. As I mentioned, we do like this jurisdiction. And we have a very strong financial profile. We just announced earnings 2 days ago. We had $82 million cash on the balance sheet at the end of Q3. We do have some debt on our balance sheet as well. We've got a $400 million high yield note. And let me just clarify, I will go back and forth between US and Canadian dollars. And I'll try and note when I am changing between the two. Our high yield note is US dollars. That was a refinancing we did in 2021. It's a 5-year note, which expires in 2026, and it pays a 7% coupon. But yeah, we have $82 million cash on the balance sheet today. We've got a US $80 million revolver as well. So we have today about US $110 million of available liquidity. So our balance sheet is in very good shape. We're covered by all the standard Canadian banks. We also have coverage by Cantor, which is a US broker, as well as Stifel, which has a very large US presence. They all reaffirmed their target prices with our earnings a couple of days ago. So our average return is probably about 50% to their target price. Our equity is widely held as a group. Taseko Board and Management is the largest holder. And then after that, we are quite widely held. We have some ETFs as some of our largest holders, so passive money, plus the likes of Renaissance Technologies, who's passive as well, and Dimensional, but no controlling shareholders. So there's a quick overview of the corp. So maybe we'll talk a little bit about copper. Today price of copper is about $3.72 per pound, and you don't have to go back very long. And Clay said this too. You don't have to go back very long when $3.74 was a fantastic price for copper. I mean, you go back a number of years, the price of copper was sort of in the $2 to $3 range. And when I started, we got excited when it went over $1. And that's 18 years ago now, but it's not that long ago. But a lot of people, they've had their concerns about the copper price because it did come down from $5 back in 2022. But we're very bullish on the medium term and long term. And what it really comes down to is, the world is transitioning to, decarbonize and move to net zero. And one thing we know about that is that takes huge amounts of copper. Copper is the fundamental material for us to meet our climate goals. And it is probably the biggest thing that could trip up the world in its attempts to meet those climate goals. S&P, about a year ago, they did a study on the copper market and the amount of copper needed for the world to get to net zero. And basically, they estimate that by 2035, demand will rise to 50 million tons of copper. Today, it's 26 million tons, give or take. So it needs to nearly double in the next 12 years. And what we know about the copper industry is it takes 16 to 18 years to build a large-scale copper mine. We'll talk about the time for how long it took us to permit our Florence copper project. But at 18, 20 years to build a copper mine, we can look out and we know with fairly good certainty what mines can come on. And the mines to meet that type of growth aren't in the pipeline. We've had 2 large mines start up here in the last couple of years, in the last year. One was the Quellaveco mine, which is Anglo's big mine in Peru, and Teck's big copper mine in Chile, QB2. Those combined are about 400,000 tons of copper per year, so very large mines. And that product has now been absorbed into the market. There aren't those big mines coming in the near term. There are very large projects, but those big ones are still decades away, not 5 years or 10 years away. We will see some expansion at existing mines, and we like Florence will start up. There are some smaller mines, but nothing like no big mines that this market needs to achieve these goals. So that only means we're headed for a major deficit, and that is pretty much unanimous across all the industry analysts and experts. We are headed for a deficit. The only question is it in 6 months or 24 months or 36 months? That's what we don't know. But when that deficit,
Hey, Ryan.
Yeah.
Hey, just a quick question on the Cobre mine. Would that impact in the near term situation if Panama decides they don't want them to have that mine anymore? I mean,
Definitely.
would it still go? What would happen there?
It's one of the, it's the top 10 largest mines in the world. I think it produces 300,000 to 400,000 tons per year. What they basically said is we're going to have a referendum in December, and basically allow the citizens of Panama to vote whether or not they want this mine. And if they vote against it, they will lose their license and it will be shut down. Now, we don't.
Not they won't operate it nationally; they'll just shut it down, right?
Well, they may at some point move to do that, but that's not going to happen immediately. And the other thing we know there is it's not going to operate nearly as well. Probably have 5 times the workforce. So, I mean, there's a lot of things that can happen here in the next month. But like I say, $10 billion worth of First Quantum market cap has been wiped out this week. So
I saw that.
And yeah, if that mine shuts down, that's a huge chunk of copper that won't be produced. So
you'll feel that.
Yeah,
in the market probably.
The market will feel that.
Yeah. Okay, great. Thanks. I'm curious about that because I saw that and I just wondered what the impact would be. It looked like it'd be pretty extreme.
Yeah, definitely.
Okay, great. Thanks.
EVs, they're topical because we see more and more of them on the road. And living in Vancouver, where I think we have the highest per capita EVs, the EVs take roughly about 4 times more copper as a conventional car today. But it's starting from a pretty small base. So it's not the actual cars, and Clay alluded to this. The copper demand is going to come from the infrastructure needed to charge all these cars. And whether it's these charging stations with 20 or 30 different chargers, or all new condos need to have X amount of charging stations and malls. And then you got to get the power to those charging stations. And what we know is the infrastructure in North America has not had the type of investment it's needed to be able to handle this, the charging infrastructure. So that all takes copper, and that's where the real demand comes from. Globally, there's still 100 million people in the world that don't have a light bulb, and another 100 million people, a billion people. So yeah, there is the future demand for copper is significant, and there is no alternative. We don't use copper for piping anymore. That demand is gone. There's been aluminum you can use for conducting electricity, but it's not nearly as good, and it can only be used for very specific purposes, not in cars and not in the charging network. So yeah, we are very bullish. The price of copper was $5 back in 2022. We think it could go easily beyond that. And the thing about copper pricing is it's very elastic. The price of copper goes to $6, it adds $100 to a price of a car. Well, that can be passed along. Same in a house. So there's really no ceiling on how high the price of copper can go. So let's get back to Taseko and our assets. Start with Gibraltar, our cash flowing producing asset today. As I mentioned, it's a large open pit copper mine. It'll produce on average 130 million pounds of copper per year. That's about 115 million pounds to our account. And it still has 22 years of mine life ahead of it. Today, our cash costs are sitting in the 220 to 230 range. Longer term, they're a little bit lower than that, but we're being impacted by higher diesel prices today. We burn a lot of diesel in our haul truck fleet, and the higher prices have added anywhere from 20 to 30 cents per pound. To replace Gibraltar today would be well north of $1 billion, and in today's inflationary environment, could be probably more like 1.5 billion. So we bought Gibraltar in 1999 for $1. The previous owners had just shut it down, and they were going to basically scrap it. We bought it. The price of, it was at that point, Gibraltar was built in 1972, and it didn't have a lot of investment put in it in the later years. So it was a pretty tired, worn out mine when we bought it. But we thought, well, we can buy it, and if the price of copper ever moves from the 60 to 80 cent range, then it might make sense to fire it up. So in 2004, the price of copper did move over $1, and we restarted the mine basically on a shoestring budget. And within a year, the price of copper continued to move forward. And the original plan is we start it, we produce some copper, generate some cash, and when the price of copper drops back below $1, then we shut it down again. Well, the price of copper didn't, and it continued to rise. So we started investing in this mine in 2006, and it ended up being a 7-year project or multi-phase project where we both expanded the mine and modernized it. We completely gutted the entire concentrator and replaced the entire mining fleet. And we took it from a processing capacity of 30,000 tons per day to 85,000 tons per day, which is where it's at today. And that cost about $800 million Canadian, that over the 6 years. And in that picture there, that gray building in the middle, that was the original 30,000 ton per day concentrator. And all the blue buildings, that's all the new infrastructure that we have constructed. How do we pay for that 800 million? Well, we operated through that whole time period. So we were generating cash. In 2010, that's when we sold 25% to a Japanese consortium for nearly $200 million. As I mentioned, we own 87.5% because earlier this year we bought back 12.5%. We bought out one of our JV partners. So we bought back 12.5% of the mine. And then in 2011 is when we issued our first high yield bond, and that was a $200 million note. And so between cash flow, selling 25% in that bond, that's how we financed all that expansion. So today we've got a steady state, long life asset operating at the higher rates. It's a great asset, generates cash, and we've taken all the cash that we've generated at Gibraltar and reinvested it back into the company. As I mentioned, we just announced Q3 results on Wednesday. We had a fantastic quarter production-wise and financially. So in Q3, we produced 35 million pounds of copper, and we generated $63 million of EBITDA. So a great quarter, this mine is highly levered to the price of copper and to its production. So when we get a good production quarter like we did, it generates a lot of cash. So our guidance for 2023 is 115 million pounds of copper, plus or minus 5%, and we're on track to meet that, if not beat that, in Q4. We've produced 88 million pounds year to date, so we're well set up to achieve that production guidance. As I mentioned, the life of mine production is about 130 million pounds. So we're a little bit below that today, but we are trending back towards that life of mine average. So that's Gibraltar, our cash flowing asset. It's just going to continue to do its thing, produce copper and generate cash for us. And we'll take that cash and develop our pipeline of projects. And as I mentioned, our next project is Florence Copper down in Arizona. So Florence is as Clay mentioned, it's a different type of project. It won't be an open pit copper mine. It's not going to be an underground mine. it will be in situ leaching or solution mining, and we'll talk a little bit about what that is. It'll produce 85 million pounds of copper per year. So at Gibraltar, we get 115 million pounds to our account. Florence won't quite double us, but it'll take us to about 200 million pounds of copper, attributable copper production per year. The big difference is at Gibraltar, our cash costs are $2.20 per pound. At Florence, they will be $1.10 per pound, so half of what they are at Gibraltar. And that gets to the mine, the mine type, or the type of mining that we'll be doing there, the in situ leaching. And Florence as well has a long mine life of 22 years. So we bought Florence, or Curious Resources, in 2014, and we've been working away, and really we've been in permitting since 2014. So when I was talking earlier about the timelines to build a mine today, 16 to 20 years, well, it took us nearly 10 years to permit Florence. It's been a long, arduous process, and to get that final permit from the EPA earlier this week is a huge milestone for the company and for this project. It was actually discovered by Conoco way back. They were out looking for oil, and they found this project. BHP ended up buying it in the 90s, and they did a bunch of test work on it. And what they found is there's the oxide cap, and it's in an aquifer, so it's fully diluted with water, and it's highly rubbleized. It's fractured and crushed rock, basically. So they tried to, they sunk a couple shafts, but they couldn't get the shafts to hold because it's saturated. So then BHP developed this in situ technology here, and so they ran solutions through the deposit. They leached out copper. It made it work. But the issue then was the price of copper was 60 to 80 cents, and BHP basically walked away from the copper business in the US Southwest. So we ended up buying it in 2014, and we've continued all that test work and to get it to where it is today. So we issued a feasibility study earlier this year. So again, a 22-year mine life producing 85 million pounds of copper per year. Capital cost remaining as of March was $230 million US. It's got nearly $1 billion NPV, 375 copper, and a 50% IRR and 2.5-year payback. This is a fantastic project. And that's because of the low upfront capital of $230 million and the low operating costs of $1.10 per pound. So a little bit about in situ recovery or solution mining. This is more akin to an oil and gas project than it is to mining, really. We will drill a well field, and that well field will be injection wells and recovery wells. And you can see in that diagram there, that center well is the injection wells, and each injection well is surrounded by 4 recovery wells. We inject a solution down into the deposit, and as that solution migrates through the deposit, it leaches out the copper, it dissolves the copper. And then we recover that pregnant leach solution in the recovery wells. And then that solution goes to an SXEW plant, a very conventional SXEW plant, where we produce pure copper cathode. And that picture in the bottom is cathode that we have already produced at Florence. It's 99.99% pure copper. It can take this copper and ship it straight to a rod factory or a rod mill. It doesn't need any further processing. The great thing about this process is it's very environmentally friendly. Relative to an open pit copper mine, energy, you can see the numbers, energy consumption 65% less, carbon emissions 70% less, and nearly 80% less water use than a conventional open pit mine. We're not digging a big hole, so there's no permanent change to the landscape. When we're done here in 25 years, this land can be reclaimed and used as any, residential area, golf course, you name it. That picture there in the top right, that's what our mine will look like. Is really nothing to see here. And yeah, from an environmental standpoint, this is the best way to extract copper. We are right by the highway. You can't see the highway on this, but the highway is just to the right. And, people will be driving on that highway and have no idea that this large copper mine is there. So in situ leaching has not been commonly used for copper. About 50% of global uranium use uses in situ leaching. And that's because of how uranium is typically found. But copper is typically found in hard rock. So at Gibraltar, we need to blast it, we need to crush it, we need to grind it, we need to regrind it to get that copper out of the rock. At Florence, as I mentioned, Mother Nature's done all this work. It's highly rubbleized. When you pick up the rock in your hand, it just crumbles, which makes it amenable to in situ recovery. But because ISR has not been used commonly for copper, we decided to build this project in 2 phases. The first phase was a $25 million test facility. So we had to go through a whole permitting process to get the permits for that. We built it in 2017, and then we operated it in 2018 and 19 for 18 months. We produced 1 million pounds of copper here. So this isn't pilot scale or bench scale. 1 million pounds of copper is definitely smaller than commercial production, but it's still significant. And the test facility proved out all of our assumptions, and it was very much a success, both proving that the ISR process will work at Florence, and also to prove to the regulators, the EPA and the state, that we can operate this facility, we can control those solutions 1,000 feet deep and protect the environment. So it was very much a success. So we wrapped that up at the end of 2019, and then we had to amend 2 key permits for commercial production. One permit comes from the state. They went through their process in 2020, and we got our final permit at the end of 2020. Then the EPA started their process in 21. And as I mentioned, we got our final underground injection control permit confirmed last week, and it was effective as of Tuesday. So we are fully permitted to move into construction and ultimately production. So we're just gearing up for construction. We'll be starting site works, ground clearing a little bit later this quarter, and then we'll start drilling the initial well field in early in the new year. We've got about an 18-month construction schedule. So we will see copper in the back half of 2025, first copper production. It's a very straightforward construction schedule. A lot of it's drilling the initial well field, and then the other main part is building the SXEW plant. And as I mentioned, the SXEW plant, it's very conventional technology. There's nothing special about it. So yeah, first copper production in the second half of 2025. So in terms of financing the $230 million, which is what we had remaining at the end of, or in March of this year. And we've already spent today about $90 million on long lead items. So we've got all those long lead items at site or en route to site today. So we are, we've got everything in place to meet our construction schedule. But in terms of funding that $230 million, as I mentioned, today we've got $110 million, and this is all US dollars I'm talking now, $110 million of available liquidity. We've done 2 other deals to date. One is a strategic partnership with Mitsui & Company USA. They will invest $50 million into the project, and initially they get a copper stream, about a 2% copper stream. And then after construction completes, they have an option to invest a further $50 million, and that stream will convert into a 10% equity ownership. And we fully expect them to do that. So that will be $100 million for 10% of the project, which is that $1 billion valuation I spoke about before. But available for construction will be that first $50 million. So we got $50 million coming from Mitsui. The first 10 will be coming to us this quarter. We also did a $25 million leasing facility with Bank of America, which we just put $20 million in our bank account subsequent to quarter end. So we still have another $5 million coming from them. So you can see there on the right side, including our current liquidity, Mitsui and Bank of America, there's a bit of a funding gap to get to that $230 million. But we're producing cash flow to Gibraltar, so we have that. And the other thing we've spoken about to the market is that we are advancing on 2 other project level financings, targeting about $100 million of additional funding. That will give us a significant buffer for that $230 million, and it will allow us to hold our cash and our revolver back, our corporate revolver back, and not use that as first money in. So we are well advanced on these 2 other financings, and I think we'll have more news on that fairly imminently. So yeah, I think in the next few weeks we'll be able to show that this, not only is it a fully permitted project, and it's interesting how things have changed. I think you go back 6 months, everyone was focused on the permit. But with what's happened in the world in the last month and uncertain financial markets and all that, the shift has gone from, okay, they got their permit, but are they going to be able to finance it? So that's what people are watching for now. And there's no doubt that we will close these 2 additional financings. And as you can see, none of these are dilutive financings. These are all either debt or some alternative financings, but not dilutive.
Yeah. Hey, Brian.
Yeah.
As you talk about that, you had put in place an ATM at one place.
Yeah.
So does this lead us to believe that you probably don't need to access that, or can you comment on that?
We have an at the market financing in place, a $50 million financing that we announced back in May. And that is an equity financing, which we have not touched. It's available to us if we chose to. But no, it's not a desire. And today, our equity is trading well below the intrinsic value of Florence and Gibraltar, and we believe our equity is deeply undervalued. So our priority is to avoid dilutive financings at these levels. So we haven't touched the ATM to date, and there are no plans to use it. Or we want to close these other financings, and that should give us get us to where we need to be.
Yeah, and it certainly looks as if the project will pay for itself fairly quickly, even at $3.60 copper or something like that, right? Because you have a $1.10 cash cost and 85 million pounds per year projected production from there. So you add those numbers up, they come up to that CapEx pretty quickly. Great, thanks. I wanted to clarify that.
Yeah. Here's a picture. As I mentioned, we've spent about $90 million to date. So this is at site. Those are tanks. And actually, I was just in Florence 2 days ago. I just got back from Phoenix yesterday. We took our board down to give them a tour, let them see where the project's at, and we went through a good construction review with them while we were there. But this is some of the equipment that we have on site. So yeah, we're well advanced in procurement. And we started this in 2021 when we saw both inflation and global supply chain issues. And we didn't want our construction timeline to be impacted because we couldn't get key components to site. So we've got all those long lead items there, and yeah, we're ready to go. We're starting to build out our team down there. So yeah, very excited about this project. It's been a long, almost 10 years since we bought it, and it's taken a little bit longer to get here, but we're here and very excited to be here. So yeah, Florence will completely transform Taseko. So maybe we've got a few more minutes. I'll just touch on Yellowhead and New Prosperity. As I mentioned, Yellowhead's in BC, not far from Gibraltar. This will be a similar scale to Gibraltar. It will be a large open pit mine, but it'll produce more copper than Gibraltar because it's higher grade. It'll produce 180 million pounds of copper per year over a 25-year mine life. So quite a large mine, and good cost structure. It's not far off the highway, off the power grid, so a good place to build. But most of our focus here over the last couple of years has been on community engagement, and specifically working with the First Nations First Nations in this area. And we're just preparing to start the EA process, which we expect to start probably in the next 6 months or so. And then, as I mentioned, we still have 3 to 4 years of EA work ahead of us, so we can continue to advance this project towards construction. But it doesn't take a lot of cash to continue to move it forward. So we'll just continue to do that and get it to ultimately a construction decision. And by that time, Florence will be up and running and generating good cash. So how we would fund this, which is obviously a much bigger capital at probably $1.5 billion, the company will be a lot different once we get to this point. And this is an asset we would most likely JV with somebody. New Prosperity.
Hey, Brian.
Yep.
Yeah, before we go to New Prosperity, but a quick question about some of your bonds. And the question is, does the B rating from the credit agencies affect the coupon rate?
Yeah, we're not investment grade.
Yep.
But I think, the coupon on those bonds is 7%, which for high yield is a very palatable interest rate. Obviously, we're in a different environment today, and we're going to have to, we'll most likely have to refinance those bonds, and that could be, sometime in 2025, we'll be looking to do that. The one thing, we won't, Florence won't have a lot of history when it comes time to refinance those bonds, but we should be through the capital spend, and we'll be on the cusp of becoming, having 2 operating assets. And in the high yield market, the biggest factor of our coupon is the fact that we've been a one asset producer. High yield markets, debt investors don't like that. They don't like the risk profile of that. So we'll be on that path towards having a second operating asset, which will definitely help us when it comes time to refi those bonds. And the other aspect is, our first bond was in 2011, then we refied in 2017, and then again in 21. I would say, most of the bonds are held by the same holders as they were back in 2011. We've got a very good following. We've gotten to know that market very well, and they've gotten to know us and gotten very comfortable with us and our ability to operate. So yeah, it's, the timing's not ideal on the refinancing, but we will be able to do that. And there'll be a window in 2025 when it comes, and we'll do that.
Great, thanks. And then another question just came up. How much cash on hand now? What will your monthly burn rate? I mean, you covered cash on hand before. And then your burn rate, I guess, depends on
construction.
So
we had 82 million Canadian as of September 30th. Well, without construction, we're generating cash because, Gibraltar is producing. The burn rate, once we go into construction, obviously we have $230 million to spend. Once we get into full-blown construction, probably most of that 230 will be spent in the, from Q1 to Q5 of construction, or sorry, from Q2 to Q5, which is why we want to get, close these financings, that the $100 million we're targeting, before we really start getting into the big spend. So that will be sort of 2024 Q1 before we really start spending. And then it could be, well, it's 230 million over, say, 6 quarters. But then we will be generating cash. So it's a bit of a tricky one. It's not like just a pure development company and they've got a standard quarterly burn rate. For us, it's different because we are generating cash, and we're just starting to, plan for construction and what that spending profile will be. But obviously there'll be, next year will be a big spending year. And I guess the one thing, just to talk about that, it's a good time to do that, is, we obviously can't control the price of copper, and we are dependent on the price of copper to generate cash from Gibraltar. So the one thing we do to protect minimum cash flow is we buy put options, copper put options, to protect a minimum price. So we are protected at $3.75 per pound for the balance of this year. And then we just bought options for Q1 of next year with a minimum price of $3.25. So we'll look to continue to push that price protection out into 2024. And if we get a bit of a run in copper here, price of copper has been trending higher, we'll look to increase the strike price of Q1 options and also get a higher price for Q2 and going forward as well. So we're trying to take some of the risk out of our cash flow by doing that. I hope that answered the question.
Yeah, I think so. We'll move forward.
Okay, so just real quick, New Prosperity. This is a huge gold copper project in central BC. It's been stuck in legal challenges, permitting, really for a decade now. But what's changed here is a couple of years ago, the provincial government asked Taseko to put our legal challenges on hold, and they also asked the Chilcotin National Government, which is the First Nations in this area, to do the same. And they asked us, both parties, to come to the table with the goal of finding a resolution and a path forward for this project. The provincial government wants this project built. And so we've been at the table for a couple of years now, and I think, the details of those conversations are confidential, but what I can say is we've made good progress with the TNG, the First Nations group, and I think, there's a level of confidence that we're going to be able to find some path forward here. What that exactly looks like, we don't know, or I don't know. But today, this project is worth 0 in our equity. So any movement, any type of resolution is a significant step forward. And yeah, it's a massive project. We'd love to be building it, but there's lots of ways we can extract value here without building it. So we'll just continue to work away on that, and we'll see. But it's a free option. So just real quick to wrap up, to build a mining company, you need reserves. And when you look at, our peers, other copper producers, we've got more reserves in the ground than any of them. We got nearly 15 billion pounds of copper in reserves in the ground. On a per market cap basis, that's 25 pounds for every dollar of market cap. You know, Hudbay's got a $2 billion market capitalization. Capstone's got a $5 billion. Oz Minerals in Australia was bought by $8.5 billion by BHP. So this just shows you how much, the reserves we have in the ground. We just need, some patient investors to allow us to develop these and create value with all these reserves. And I'll just wrap up here. This is really the valuation argument, the top graph there. Gibraltar today's got, our interest in it has a 1.3 billion Canadian NPV. Florence in Canadian dollars has got a 1.2 billion NPV. You take away our net debt of about $500 million, leaves you with $2 billion of intrinsic value of those two assets alone. Relative to our market cap today of $500 million, there's $1.5 billion valuation gap. And we believe that's Florence. There's a lack of recognition of Florence, the value of Florence in our equity. And we think as we continue to de-risk it, and now we've got this final permit, the market's watching us to see how these next two financings, or when these next two financings get announced. But that value has to start flowing into our equity. We saw a good move here this week with our earnings, and we've got some real catalysts, real positive catalysts here in the next, 3 to 6 months. Well, really 3 to 12 months as we de-risk these last few things of Florence and then get into construction and move it towards production. It's a very exciting time for the company and all of us here. Like I mentioned, we've been working long and hard to get to where we're at. And now the fate of Florence is in Taseko's hands, no longer in a regulator's hands. And I have all the confidence in the world in the team here that we're going to build it on time and on budget and execute on production. So yeah, there's a big opportunity. You're not paying, and this is just 2 assets. This doesn't include our other assets. So with that, I'll wrap it up and take any questions if there are any.
Great presentation, Brian, as always. We always look back at the slide before this one. I think for us is the big takeaway, the 25 pounds or so per dollar, or 25 pounds of copper per dollar of market value or market cap, which is just so much higher than all of your other peers, the other copper players in the mid-tier space. And the fact that all of those pounds are located in North America.
Yes.
When you contrast that with this Cobre copper news and things like that, I mean, I really think you have got a great, a large valuation of metal in the ground that's not being realized in the market cap at all.
Yeah.
Well beyond just your valuations of Florence and Gibraltar. There's a big gap there, but you add in these other metals that you have projects in North America. It looks like a really good place to play the copper side. And these valuations at $3.50, $3.75 per pound. Let's fast forward the clock a year or 2 or 3, where everyone thinks that we're going to be in an environment of 4 or 5, maybe even higher per pound copper. Those valuations will significantly move up. So great place. And if you have a question for Brian, I know we've covered a lot of material during the presentation, but if you have a question, feel free to ring in. You can either do it on your Q&A icon, which a few of you have already done, as well as the chat icon, or you could raise your hand and we can light up your microphone so you can ask the question right online. I had a really quick question. In the press release that you, where you announced the final permit, you said it's about 18-month construction period from board approval. And is it already been, obviously you've gotten board approval now to move forward on construction, or is that still pending, or where are we at on that? Is that just
we have board approval, yes. But look, this is not a race to get it into production as quick as we can. We've got, very uncertain financial markets.
Sure.
We are going to be very cautious and disciplined how we move forward. Tech, I talked about QB2 in Chile, their big mine that they're actually ramping up. And just a week ago, they announced another $600 million of costs going towards that. We can't afford, CapEx blowout. We can't afford a 50% increase in our CapEx. No. They've already gone up from when we originally estimated capital costs, and we're very comfortable with the 230 remaining. But we're going to be very prudent how we move forward. So it's roughly 18 months to build. I wouldn't say we're in construction yet. We want, like I said, we want a little bit more clarity on the financing, and we're almost there. I think we're going to have something very imminently to announce on that. But we're just going to be cautious. So that 18 months, I don't know, it might start in December, but it's roughly 18 months. And
fair enough. I mean,
in Q3,
we always like the fact that
Q3 is a good time to sort of expect that first copper production.
Okay, great. The one thing that Taseko has always been is you've been methodical, you've been careful, predictable, and I think that bodes well for your management team, Stuart, and everyone up there. Well, you've been there, what you said, 18 plus years, right? This isn't something you just started out on.
I see another question just came
about
water usage. I assume this is about Florence. So first of all, we don't use a lot of water at Florence. When we're injecting those solutions, we just continue to recycle those solutions. So water usage is very low. All the water we need to operate Florence for 22 years, we have the rights to that water, and they're on our site. So, and these that we're not taking from drinking water aquifers, we're taking from deep aquifers that aren't, they're not drinking water. So, yes, we have all the water we need. And, the other part is, right now we're going through a rinsing phase of the test facility. So we are restoring that aquifer that's down, 500 to 1,000 feet deep. We're restoring it to the quality it was before. So in the end, we're going to have, we won't have used a lot of water. And the other thing so that's a long answer. So there's no concern or issues regarding water use and access to water.
Great. That's another thing we liked about the Florence project. It's very environmentally friendly.
Yeah.
It doesn't use very much water, very little land disturbance and things like that. Okay, well, I think we've pretty much come up to our time limit today, Brian. I want to thank you so much for coming on and presenting. Today's code word, which you will need for the feedback report, is Taseko Zoom. Again, it's Taseko Zoom. So you need that for your feedback report. If you have any additional questions, you can get those on the company's website. That's tasekomines.com. It includes all the company's most recent press releases. There's a PowerPoint presentation there as well. Details on the portfolio of both their producing as well as their in development projects, and also a full set of financials. We also have some research reports, recent ones. If you'd like to get a copy of that, please send me an email and I can send you a couple of the most recent research reports as well. Brian, thanks so much for coming on today. Really exciting what's happening with Taseko. Congratulations on your recently approved Florence mine, and we'll look forward to having you back on in a future date very soon.
That's great. Well, thanks very much, everyone, for taking the time this morning, and look forward to updating you as we continue to make progress at Florence.
Great. We'll look forward to having you back on. I want to thank everyone for coming. I'm sorry, Brian. Thanks for coming on, everyone, today, and we'll look forward to having you at a future presentation with Torrey Hills Capital Till then, be safe and be well. Thanks, Brian. We'll talk to you soon.
Thanks. Bye-bye.
You bet. Take care.